Question 1. Which of the following is a primary principle of insurance that helps to determine how the insurer will compensate the insured in the event of a loss? A. Legal capacity. B. Indemnity. C. Insurable interest. D. Underwriting. Answer: B. Indemnity. Explanation: the principle of indemnity ensures that the insured is compensated for a loss but is not allowed to profit from it. This means that the insurer will restore the insured to the same financial position they were in prior to the loss, but not provide more than that. It prevents the insured from gaining a financial advantage over the event that caused the loss. Legal capacity refers to a party's ability to enter into a legal contract. Insurable interest refers to the financial stake in the insured property or life, which must exist at the time of the loss for the contract to be valid. Underwriting involves the process of evaluating the risk of insuring the potential policyholder. Question 2. Scenario-based. Mr. Thompson, a Minnesota-based insurance producer, is advising a client on selecting a life insurance policy. The client is interested in coverage that would provide financial support for their family for a specified period of time, but they are not concerned with accumulating cash value. Which of the following life insurance policies should Mr. Thompson recommend? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Answer: C. Term life insurance. Explanation: term life insurance provides coverage for a specific period of time, e.g. 10, 20, or 30 years, and pays a death benefit if the insured dies during that term. It does not accumulate cash value, which aligns with the client's request. Whole life insurance offers lifelong coverage and accumulates cash value over time. Universal life insurance combines flexible premiums with a death benefit and a cash value component, making it unsuitable for someone seeking only a temporary financial safety net. Variable life insurance allows for investment in various securities within the policy, which could generate cash value but may not be appropriate for someone seeking simplicity. Question 3. Which of the following is not typically considered a factor influencing underwriting decisions for property insurance? A. The insured's credit score. B. The location and condition of the property. C. The age and health status of the insured. D. The type of building materials used in construction. Answer: C. The age and health status of the insured. Explanation: underwriting for property insurance primarily focuses on factors directly related to the property itself, not the personal health status of the insured. Credit score can be used by insurers as an indicator of financial responsibility influencing premium rates. Location and condition of the property are critical, as properties in areas prone to natural disasters or with poor maintenance may present higher risks. Building materials affect the property's susceptibility to damage, e.g. fire-resistant materials may lower premiums. The age and health status of the insured is more relevant for life insurance underwriting, not property insurance. Question 4. Which of the following situations would most likely void an insurance contract due to misrepresentation by the insured? A. The insured unintentionally forgot to list a minor health condition when applying for a life insurance policy. B. The insured intentionally provided false information about their income to obtain a lower premium rate. C. The insured neglected to notify the insurer about minor home renovations that increased the home's value. D. The insured failed to update their address after moving to new home within the same state. Answer: B. The insured intentionally provided false information about their income to obtain a low premium rate. Explanation: an insurance contract can be voided if the insured commits material misrepresentation or fraud. Providing false information intentionally to influence the premium rate or policy terms is a serious violation and can render the contract void. Unintentional omissions, like forgetting a minor health condition, are usually not considered fraudulent, though they may lead to policy adjustments. Failing to notify the insurer about minor renovations or update an address generally does not result in contract voidance unless it affects the risk significantly. Question 5. Scenario-based. MS. Rivera owns a commercial building in Minnesota and recently purchased a commercial general liability CGL policy to protect her business. A customer slips on a wet floor in her building and sues for medical expenses. Under which section of MS Rivera's CGL policy would this claim be covered? A. Coverage: bodily injury and property damage liability. B. Coverage B. Personal and advertising injury liability. C. Coverage C. Medical payments. D. Coverage D. Premises liability. Answer: A. Coverage: bodily injury and property damage liability. Explanation: Coverage under the CGL policy covers claims for bodily injury and property damage arising from the insured's operations, premises, or products. Coverage B deals with personal and advertising injury, which includes defamation or copyright infringement claims. Coverage C provides limited medical payments to injured parties, but it does not cover legal liability or lawsuits. Premises liability is concept, but it's not specific section under standard CGL policy. Question 6. Which of the following is a prohibited practice for Minnesota insurance producers according to state regulations? A. Offering premium discounts for policies paid in full upfront. B. Refusing to sell a policy to someone with a criminal history. C. Using high-pressure sales tactics to persuade clients to purchase policies. D. Cross-selling a life insurance policy with a homeowner's policy. Answer. C. Using high-pressure sales tactics to persuade clients to purchase policies. Explanation. Minnesota insurance law prohibits unethical sales practices including high-pressure tactics, misleading advertising, and fraudulent behavior. Offering premium discounts for upfront payments is generally allowed if disclosed properly. Underwriting decisions can take a client's criminal history into account for risk assessment. Cross-selling is legitimate sales technique, provided the producer acts ethically and complies with disclosure requirements. Question 7. In Minnesota, what is the minimum auto liability insurance coverage required for bodily injury to one person in an accident? A. $15,000. B. $30,000. C. $50,000. D. $25,000. Answer. B. $30,000. Explanation. Minnesota law requires a minimum liability coverage of $30,000 for bodily injury per person, $60,000 for bodily injury per accident, and $10,000 for property damage. These minimums are often referred to as 30-60-10 coverage. Failure to carry the required coverage can result in penalties, fines, and license suspension. Question 8. Scenario-based. Mr. Patel is applying for a homeowner's insurance policy in Minnesota. He informs the insurer that his home has a fire alarm system installed. However, after a fire incident, it is discovered that the fire alarm was non-functional at the time of the policy application. What action can the insurer take? A. Deny the claim based on material misrepresentation. B. Pay the claim in full and adjust future premiums. C. Cancel the policy immediately, retroactive to the day of application. D. Pay a partial claim based on the percentage of truthfulness in the application. Answer. A. Deny the claim based on material misrepresentation. Explanation. The insurer can deny a claim if the insured misrepresented a material fact that influenced the policy terms. The fire alarm system was a critical risk factor, and the insurer would have considered this in setting the policy premium. Misrepresentation of such a factor constitutes a breach of contract. Question 9. Which of the following policies would best protect a business owner from employee theft and dishonesty? A. Business owner's policy BOP. B. Commercial general liability CGL policy. C. Crime insurance policy. D. Errors and omissions EO policy. Answer. C. Crime insurance policy. Explanation. A crime insurance policy covers losses resulting from theft, fraud, or dishonesty committed by employees or external parties. It includes coverage for embezzlement, forgery, and fraudulent financial transactions. A BOP provides property and liability coverage, but typically does not cover employee theft. A deal-overs liability claims such as bodily injury or property damage. An EO policy provides coverage for professional mistakes and negligence, not theft. Question 10. Which of the following is a valid reason for an insurer to cancel a homeowner's policy in Minnesota midterm? A. The policyholder failed to update their contact information. B. The policyholder installed a swimming pool without notifying the insurer. C. The policyholder committed insurance fraud by filing a false claim. D. The policyholder moved to another state but kept the property insured. Answer. C. The policyholder committed insurance fraud by filing a false claim. Explanation. An insurer can cancel a policy midterm for valid reasons including non-payment of premiums, material misrepresentation, and fraudulent behavior. Filing a false claim is considered insurance fraud, which is grounds for immediate policy cancellation. Failing to update contact information or not notifying about a swimming pool installation may result in policy adjustments but is generally not grounds for midterm cancellation. Keeping a property insured while moving out of state is allowable as long as the policy is appropriately adjusted. Question 11. Under Minnesota insurance regulations, which of the following is A requirement for a producer's license renewal. A. Completing minimum of 15 hours of community service. B. Paying renewal fee and completing continuing education. C. Requirements. C. Passing licensing exam each year. D. Submitting sworn affidavit verifying policy sales. Answer: B. Paying a renewal fee and completing continuing education. C. Requirements. Explanation: to renew an insurance producer's license in Minnesota, producers must pay a renewal fee and complete the required C hours. C ensures that producers stay updated on regulations and industry practices. Question 12. Scenario-based. Mr. Johnson files a claim for wind damage to his home under his homeowner's policy. The insurer inspects the damage and determines it to be normal wear and tear rather than wind damage. How should the insurer handle this claim? A. Approve the claim and pay the full amount requested. B. Deny the claim, citing the wear and tear exclusion in the policy. C. Offer partial payment as goodwill gesture. D. Cancel the policy for filing fraudulent claim. Answer: B. Deny the claim, citing the wear and tear exclusion in the policy. Explanation: most homeowners' policies exclude coverage for wear and tear, as it is considered maintenance issue. Claims must be based on covered perils listed in the policies such as windstorms, fire, or theft. Question 13. What is the grace period for paying a premium on a life insurance policy in Minnesota? A. 10 days. B. 31 days. C. 45 days. D. 60 days. Answer: B. 31 days. Explanation: Minnesota law provides a 31-day grace period for life insurance policies. This means that if a premium payment is missed, the policyholder has 31 days to make the payment before the policy lapses. Question 14. Which type of auto insurance coverage would pay for damages to the insured's vehicle in hit-and-run accident in Minnesota? A. Liability coverage. B. Collision coverage. C. Uninsured motorist coverage. D. Comprehensive coverage. Answer: C. Uninsured motorist coverage. Explanation: in Minnesota, uninsured motorist coverage protects the insured if they are involved in an accident with an unidentified driver, such as a hit and run. Question 15. Under Minnesota law, which of the following perils is typically excluded from a standard homeowners insurance policy but can be added through an endorsement? A. Fire. B. Vandalism. C. Earthquake. D. Hail. Answer: C. Earthquake. Explanation: a standard homeowners insurance policy typically does not cover earthquakes. However, earthquake coverage can be added through an endorsement for additional protection. Question 16. Which of the following is a key responsibility of the Minnesota Insurance Commissioner? A. Setting insurance premium rates for all policies. B. Investigating consumer complaints and enforcing insurance laws. C. Representing policyholders in court disputes. D. Approving all insurance claims before payment. Answer: B. Investigating consumer complaints and enforcing insurance laws. Explanation: the Insurance Commissioner is responsible for regulating the insurance industry, enforcing state laws, licensing producers, and investigating complaints from consumers. Question 17. In Minnesota, which type of insurance policy is mandatory for all employers? A. Health insurance. B. Workers' compensation insurance. C. Life insurance. D. Disability insurance. Answer: B. Workers' compensation insurance. Explanation: in Minnesota, workers' compensation insurance is required by law for all employers. It provides medical benefits and wage replacement to employees injured on the job. Question 18. A homeowner's policy in Minnesota includes $1,000 deductible and covers fire damage. If fire causes $12,000 in damage, how much will the insurer pay? A. $11,000. B. $12,000. C. $1,000. D. $10,000. Answer: A. $11,000. Explanation: the deductible is the amount the policyholder must pay out of pocket before the insurance company pays the remainder, in this case, $12,000. $1 is equals $11,000. Question 19. Scenario-based. Mr. Ahmed owns a car and has liability-only auto insurance. He accidentally hits a deer while driving, causing significant damage to his vehicle. Which of the following statements is true? A. His policy will cover the cost of repairing the vehicle. B. His policy will cover the deer's medical expenses. C. His policy will not cover the damage to his vehicle. D. His policy will cover towing and rental expenses. Answer: C. His policy will not cover the damage to his vehicle. Explanation: liability-only auto insurance covers damages or injuries caused to others but does not cover damage to the insured's vehicle. Comprehensive coverage is required to cover incidents like hitting an animal. Question 20. Which of the following is an example of an unfair claims practice under Minnesota law? A. Investigating a claim before payment. B. Denying a claim due to policy exclusions. C. Failing to provide a timely response to a claim. D. Requiring documentation for a claim. Answer C. Failing to provide a timely response to a claim. Explanation. Minnesota law requires insurers to handle claims promptly and communicate with claimants in a timely manner. Delays in claim handling can be considered an unfair claims practice. Question 21. Which of the following would be covered under a Minnesota homeowner's insurance policy with a personal property endorsement? A. Damage to a neighbor's fence caused by the insured's dog. B. Theft of valuable painting while on vacation in another country. C. Flood damage to the insured's basement. D. Normal wear and tear on the insured's appliances. Answer B. Theft of a valuable painting while on vacation in another country. Explanation. Personal property coverage typically extends worldwide, covering theft of personal belongings even when the insured is traveling. However, flood damage and wear and tear are not covered under standard homeowners policies. Question 22. In Minnesota, an insurer must provide at least how many days' notice before canceling an auto insurance policy for non-payment of premiums? A. 10 days. B. 14 days. C. 30 days. D. 45 days. Answer A. 10 days. Explanation. Minnesota law requires that insurers provide a minimum of 10 days notice for cancellation of an auto insurance policy due to non-payment of premiums. Question 23. What is the minimum required liability coverage for bodily injury per accident under Minnesota's auto insurance laws? A. $10,000. B. $30,000. C. $50,000. D. $60,000. Answer D. $60,000. Explanation. In Minnesota, the minimum required liability coverage for bodily injury per accident is $60,000. The minimum per person is $30,000 and $10,000 is required for property damage. Question 24. Which of the following types of policies is required by law for Minnesota contractors? A. Errors and omissions insurance. B. Workers' compensation insurance. C. Life insurance. D. Inland marine insurance. Answer B. Workers' compensation insurance. Explanation. Minnesota law requires that contractors carry workers' compensation insurance to protect employees in case of work-related injuries. Question 25. Scenario-based. Sarah, a licensed Minnesota insurance producer, is approached by a potential client, Mr. Peterson, who wants to purchase a life insurance policy. During the application process, Mr. Peterson intentionally omits his history of heart disease. 2 years later, he dies from a heart-related condition and his beneficiary files a claim. The insurer discovers the omission during the claims investigation. How is the insurer likely to respond under Minnesota insurance law? A. The insurer will pay the full death benefit because the policy was in force for more than 1 year. B. The insurer will reduce the death benefit but still pay a portion to the beneficiary. C. The insurer will deny the claim and rescind the policy due to material misrepresentation. D. The insurer will pay the claim but apply a penalty to the beneficiary. Answer C. The insurer will deny the claim and rescind the policy due to material misrepresentation. Explanation. Under Minnesota insurance law, if a material misrepresentation is found on the insurance application, the insurer has the right to rescind the policy and deny the claim. In this case, Mr. Peterson's omission of his heart disease history is material fact that would have influenced the insurer's decision to issue the policy or set the premium rate, even though the contestability period, typically 2 years, has passed. Fraudulent misrepresentation allows the insurer to deny the claim. Question 26. Which of the following is excluded from coverage under a Minnesota commercial general liability (CGL) policy? A. Bodily injury caused by the insured's negligence. B. Property damage caused by covered peril. C. Product liability claims. D. Intentional acts by the insured. Answer D. Intentional acts by the insured. Explanation. Intentional acts are excluded from coverage under a deal policy as insurance is intended to cover accidental or negligent acts, not deliberate harm. Question 27. Under Minnesota law, a producer must report any criminal conviction within how many days to the Department of Commerce? A. 10 days. B. 30 days. C. 60 days. D. 90 days. Answer B. 30 days. Explanation: Minnesota producers are required to report any criminal convictions within 30 days to the Department of Commerce, ensuring transparency and compliance. Question 20. Which of the following statements about Minnesota's no-fault auto insurance system is true? A. It allows policyholders to sue for all damages after an accident. B. It covers medical expenses and lost wages regardless of fault. C. It does not cover property damage. D. It requires deductible before benefits are paid. Answer: B. It covers medical expenses and lost wages regardless of fault. Explanation: Minnesota has a no-fault auto insurance system, which means personal injury protection (PIP) covers medical expenses and lost wages for the insured regardless of who caused the accident. Question 29. Scenario-based. An insured has a personal umbrella policy with a $1 million limit. After a car accident, the insured is found liable for $600,000 in damages, but their auto policy only covers up to $250,000. How much will the umbrella policy pay? A. $600,000. B. $350,000. C. $250,000. D. $1 million. Answer: B. $350,000. Explanation: The umbrella policy covers liability beyond the limits of the insured's auto policy. Since the auto policy covers $250,000, the umbrella policy will pay the remaining $350,000. Question 30. Which of the following types of business insurance would protect a Minnesota business owner from employee theft? A. Professional liability insurance. B. General liability insurance. C. Business interruption insurance. D. Crime insurance. Answer: D. Crime insurance. Explanation: Crime insurance covers businesses against employee theft, fraud, and other criminal acts.